Let's get right into it. What if I told you the biggest difference between the wealthy and everyone else isn't how much they earn, but how much they get to keep? Turns out, it all comes down to understanding the one thing most of us try to ignore: taxes. So let me ask you this. What if the entire tax system, which was originally created to make the rich pay their fair share, is actually doing the exact opposite and punishing the middle class instead? And why is it that if you're an employee, you get taxed before you even touch your money, but if you're a corporation, you get to spend your money before you pay a dime in taxes? And the big one, how are the wealthy legally using this system to keep so much more of what they earn? Well, the answers are all in Chapter 4 of Rich Dad, Poor Dad, and I promise you this is going to change the way you look at your paycheck forever. To really get this, we have to rewind a bit. Robert Kiyosaki explains that his rich dad never saw Robin Hood as a hero. He saw the steal from the rich, give to the poor idea as a flawed concept that, believe it or not, ultimately hurts the very people it's supposed to help. You see, income tax wasn't always a thing. It actually started out as a temporary measure, both in Britain and here in America, usually to pay for wars. It wasn't until 1913 that the US government made it a permanent part of life. So how did they sell this permanent tax to the public? Simple. They made a powerful promise. This quote from the book just nails it. The idea was sold by telling the poor and the middle class that taxes were created only to punish the rich. Of course, the masses loved it and voted for it. But that's not exactly how things played out. Because here is the absolute key. When new rules get made, the rich don't just sit back and complain. No, they adapt. They learn the rules of the new game, and then they figure out how to win. The wealthy have the resources, the influence, and most importantly, the drive to find solutions. They don't just take the hit from higher taxes. They go out and hire the smartest accountants and lawyers they can find to discover all the legal ways to keep their tax bill as low as possible. And what's their number one tool for doing this? The corporation. Now, when I say corporation, I want you to forget the image of some giant glass skyscraper. At its heart, a corporation isn't a building at all. It's just a legal document. Think of it like a file folder in a lawyer's office that creates a separate legal entity designed for one main purpose: to protect wealth. Okay, and this right here brings us to the biggest aha moment of the whole chapter. This is the secret that separates how money flows for an employee versus how it flows for a corporation. If you're an employee, you know this feeling all too well. The government gets its cut of your paycheck before you even get a chance to see it. You are taxed first, period. But a corporation gets to be taxed last. And that simple little flip in the order of operations, it changes everything. Let's look at the two paths side by side. For an employee, the flow is you earn money, you pay taxes, and then you get to spend whatever's left. But for a corporation, the flow is you earn money, you spend money, and then you pay taxes on what's left over. That middle step, spending before you're taxed, is the entire game. So what kind of spending are we talking about? Well, we're talking about legitimate business expenses that get paid for with pre-tax dollars. Things like vacations that are structured as board meetings, car payments, gym memberships, business lunches, all of it. And to be clear, this isn't illegal tax evasion. It's legal tax avoidance written right into the tax code for businesses to use. So the natural question is, how can you start playing this game? Well, it's not about becoming a tax cheat. It's about raising your financial IQ. It's about taking the time to learn the rules of the game that the wealthy have already mastered. Rich Dad breaks down financial IQ into 4 basic pillars. First is accounting. You have to be able to read the numbers and understand what they're telling you. Second is investing, the art of making your money work for you. Third is understanding markets, knowing the basics of supply and demand. And finally, number 4 is the law, which is all about knowing how to use legal structures, like corporations, to get those tax advantages and protect your wealth. And that last pillar, the law, brings us right back to the corporation. It's so important to see it not as this big, scary thing for billionaires, but as a powerful tool that anyone can use to build and, just as importantly, protect their wealth. Think of a corporation as a shield that protects you in 2 major ways. First, you get the tax advantages, like we just talked about. Second, you get protection from lawsuits. The rich often set things up so their corporations control everything, while they personally own nothing. This puts a legal wall between their personal assets and any business-related lawsuits. This all really boils down to a huge shift in focus.
You see, most people focus on their income, their salary. They're always thinking, how can I get a raise? But the rich, they focus on their asset column and the legal structure that protects those assets. That's the real secret to building wealth that lasts.
And this really is the tragedy of the whole system. As Kiyosaki points out, the people who lose out are the uninformed. They're the good, hardworking people who get up every single day, go to work, and pay their taxes without question, never realizing they're playing a game where they don't know the rules. The real disadvantage isn't a lack of hard work, it's a lack of financial education. So, which path do you want to be on? The one where you work hard, pay a huge chunk of your income in taxes, and then get taxed again on whatever little bit you manage to save? Or the path where you invest a little time to develop your financial intelligence and use your brain and your assets to build real wealth? The path you choose reveals everything about your mindset. But what if building wealth wasn't just about playing the tax game better? What if you could literally invent money? Well, in our next explainer on Chapter 5, we're going to dive into how the rich create opportunities and wealth from nothing. It's a concept that's going to challenge everything you thought you knew about where money actually comes from. You're not going to want to miss it.